Hey everyone, welcome back to Corporate Decoder. Today we're diving into Mattel's latest proxy statement, which sounds about as thrilling as a board game with missing pieces. But stick with me. We're going to uncover what it all means for you, the stockholder, and whether Barbie and Hot Wheels are still driving this toy giant forward. Let's start with the good news. Mattel's management is calling 2024 another success. The company says it grew profitability, expanded margins, and generated strong cash flow, even compared to the Barbie movie craze of 2023. The company's net sales were almost the same as last year, but earnings per share exploded by 16.3%. They also have almost $600 million in free cash flow, and ended the year with $1.4 billion in cash on hand. That's like having a toy chest overflowing with money. Mattel is still king of the hill in dolls, vehicles, and infant toddler toys. Apparently, Barbie, Hot Wheels, Fisher-Price, and Uno are each the top dogs in their own categories. However, net sales were down 1% versus the prior year. Was Barbie's success a fluke, or can Mattel keep the magic alive? Mattel isn't just about toys anymore. They're pushing hard into entertainment. A live-action Masters of the Universe movie is slated for 2026. Plus, there are movies planned for Matchbox, Monster High, and Bob the Builder, bringing the total films in development to 16. Mattel's TV studio released 14 shows and specials, including a relaunch of Barney. They even have mobile gaming and live events on the rise. This shows they are trying to diversify beyond traditional toys. Mattel spent $400 million to buy back its own stock last year, which is on top of $203 million the year before. It is a way to give money back to shareholders. To keep profits growing, Mattel started a program called Optimizing for Profitable Growth to save $200 million by 2026. They've already saved $83 million, so they are ahead of schedule. This proxy statement is a way to tell shareholders how to vote on important issues, including who gets to sit on the company's board. It is like a popularity contest with real-world consequences. Mattel brags that they received awards for their workplace culture, like Best Place to Work. Good workplace culture is more than just a nice-to-have. It's a must-have for attracting incredibly talented people. It says here that Mattel is serious about listening to its investors. In 2024, they chatted with stockholders representing over half of their shares. This is how management is held accountable. The board is recommending that shareholders vote for the current list of nominees for board of directors. One important part of this proposal is a one-time grant of performance-based restricted stock units to Yannong Kreis, who is both CEO and chairman, in order to incentivize retention. The proxy lays out the skills and experience each director brings to the table, like expertise in brand marketing, entertainment, or finance. The document says that it wants a wide range of experience and perspectives for the board, but a high number of them are considered experts in human capital management. Oh, here's an interesting checkbox. No fee required. It cost money to send this proxy to the shareholders, but this time at least it did not require a fee. Now we get to a bit of disagreement. Some shareholders want Mattel to release a more detailed plan to reduce its impact on climate change, including setting targets for their entire supply chain. Mattel's board is pushing back, saying they are already doing enough and don't need to spend more time or money on this. Here is another table we can analyze. Let's look at what those running the company own in terms of shares. Shareholders are asked to approve PricewaterhouseCoopers as their accounting firm. This one usually passes without much fuss. The document then lists what they paid to PricewaterhouseCoopers. The grand total is about $10, is about $10.6 million. Most of this was for audit fees, about $9.3 million. That makes sense since it's an accounting firm, but they also got over $1 million for tax services. One thing to mention is the CEO to median employee pay ratio, which comes out to 4,028 to 1. Mattel explains this number is high because a lot of their workers are based in China, where labor costs are lower. Scroll long-term incentives, LTIs, TEF scroll. Mattel also uses performance units, which are basically stock options that vest depending on how well the company does over a 3-year period. This is to get executives to think long-term. The document then asks the shareholders to vote on whether they want the officers to be personally liable for damages or not so. So what's the real story here? Mattel is trying to transform itself from a toy company to an entertainment company, and they are taking cost controls very seriously. Sales are soft, but profits are up, and the leadership is being rewarded handsomely with stock and bonuses. The company seems to be trying to become a media powerhouse, but they still have to prove they can create new franchises on par with Barbie. It seems like everything hinges on the entertainment ventures taking off. If those movies and shows are hits, Mattel could see massive growth. If not, well, they might have to rely on more Barbie nostalgia to keep things afloat. I keep an eye on those entertainment ventures and Scope 3 emission progress. They're really key areas at XTDM. Thanks for watching. If you enjoyed, please subscribe, like, and comment.